All right, let's talk core mining. Everyone's always digging for the next hidden gem, but what if the real monster play is a giant that's just been sleeping? Today, we're breaking down the investment case for core, ticker CDE, and believe me, the debate around this name is heating up.
Okay, so let's set the scene. Picture a trading desk. The skeptic in the room leans forward, points at the chart, and says, "Guys, look at this. CD is already up 300% off the lows. Have we missed the boat? Is the easy money already gone?" And you know what? It's a totally fair question. That chart looks like a vertical launch.
But the macro bull on the other side of the desk, he doesn't even blink. He just fires right back. You're looking backwards. You're looking at the past. I'm looking forward to a world with $100 silver. And in that world, this thing is just getting started. That one sentence just completely reframes the entire debate. So this is the whole mental shift, right? This isn't about trying to catch a falling knife or bottom fish a beaten down stock. This is about analyzing a company that's in the middle of a powerful breakout. The question isn't, did we miss it? The real question is, where does this go next if silver really takes off? So what's actually powering this whole thesis? Well, the bull case really starts and ends with one massive core asset, the Rochester mine out in Nevada. And this isn't just any old mine. People call it the volume monster of the silver sector because it was built for one thing: pure, unadulterated scale. And look, this isn't some theoretical blueprint or a hopeful press release. We are talking about a $600 million expansion project that is done, it's complete, the capital is spent, the steel is literally in the ground, this machine is built, and it's ready to run full tilt.
And that brings us to the central paradox of Rochester, the real tug of war. The skeptics look at it and all they see is low-grade rock. We're talking less than an ounce of silver per ton of dirt. But the bulls, they look at the exact same thing and see a gigantic cash flow machine that only truly comes alive when silver prices are high, precisely because of its incredible scale.
Oh, and let's not forget the zip code. This whole operation is in Nevada, USA. In a world that seems to get crazier by the day, having your main engine in a safe, stable jurisdiction, well, that's not just a nice to have. It's a critical feature that earns a massive premium from the market.
Okay, so now let's get into how this all translates into stock performance, because this is where the physics of the investment gets really, really interesting. You have to understand the math that's going on under the hood here.
And it all comes down to one powerful concept: operational leverage. It's actually pretty simple. It's what happens when you have really high fixed costs. As your revenue, the silver price, goes up, your costs pretty much stay flat. That means every extra dollar of revenue just drops straight to the bottom line. Profits don't just grow, they explode higher. Now, the best way to visualize this is the skiing downhill analogy. Think about it. At $22 silver, the company was basically running uphill into the wind. High fixed costs and inflation were just eating up all their profit margins. But at $100 silver, now they're at the top of the mountain. The hard work is done. All they have to do is point the skis downhill and let gravity do the work. So let's break that down. Step 1, the high fixed costs. That's the ski lift, right? The massive crushers and the infrastructure at Rochester, that's already built and paid for. Step 2, the rising metal price. That's what gets you to the top of the mountain. And step 3, massive margin expansion. That's you, pushing off the peak and picking up incredible speed on the way down. And there's another incredible benefit that kicks in here. It's called the cutoff effect. In simple terms, at higher silver prices, millions of tons of rock that used to be considered worthless waste suddenly become economic to process. They're magically transformed into profitable ore. So the mine's life gets longer and the resource gets bigger, all without spending another dollar on exploration. So here's the absolute key when you think about valuing this stock. You are not paying for today's earnings. That's like judging a skier's speed while they're still riding the lift up. What you're really paying for is the potential for that future explosive margin expansion. It's basically a call option on the price of silver. But the story doesn't actually end with Rochester. If Rochester is the main engine, there's this incredible kicker, a second engine that the market seems to have totally forgotten about. It's a free call option that could supercharge the whole thing. It's a mine called Silvertip up in British Columbia. Now, this one is the polar opposite of Rochester. It's a super high-grade deposit, loaded with zinc, lead, and silver. And the key thing is, right now, it's just sitting there, idle on what they call care and maintenance. So here's the punchline. At today's metal prices, Silvertip just doesn't make economic sense to turn on. But at $100 silver, the entire calculation flips. The company can restart it, and it suddenly becomes a free second mine, a huge asset that the market is valuing at pretty much zero right now. So we're not just talking about some small, incremental improvement. This is like finding out the race car you bought has a second hidden engine under the hood, just waiting for you to flip a switch. So you add it all up, you take the operational leverage from the volume monster Rochester, you add the massive optionality from the forgotten Silvertip mine, and what you get is a classic high beta stock. All that means is that it's designed to move up and down, with way more velocity than the price of silver itself. It is literally built for speed. So the final takeaway here is incredibly simple. This is not the stock you own if you think silver is going sideways or down. But if you are a true silver bull, if you believe we are on a path to $100 an ounce, then Coeur Mining is purpose-built to be your vehicle for maximum torque and maximum speed.
And that brings us right back to the original debate on the trading floor. Is Coeur Mining a sleeping giant, just now waking up, powered by leverage, and ready to make a historic run? Or is it just a high-risk, high-beta bet that's already had its big move? The answer to that question really depends on just one thing: where you think the price of silver is going next. And of course, just a quick but important reminder, this is for educational and informational purposes only. It is definitely not financial advice. Investing in mining stocks, especially high beta ones like this, comes with a huge amount of risk and volatility. Please do your own research.